I say get the confetti ready because the S&P 500 needs a gain of 27 points to mark a brand new record. It's up 29 at the moment. I don't know, for a second there, it's up 28. This is gonna be down to the second here. So we do have a gain for the NASDAQ, Russell, and the transports. Tough day for the Dow Jones Industrials, down 404 points, most of that attributed to United Health, which is selling off in a big way. Defense stocks, though, are getting a shot in the arm. Northrop Grumman, maker of the B-21 Raider military aircraft, posted a 17% rise in fourth quarter profit, and RTX, which is known for a whole bunch of missile systems, reported a top and bottom line beat. But our countdown closer has his laser pointed at a software security company that just landed a major deal with the United States Army. Joining me now, Argent Capital Management Portfolio Manager Kirk McDonald. Welcome, Kirk. All right, give us your name.
Hi, Liz. Thanks for having me on the show. So the defense contractor I'm talking about is CACI Technologies. They just landed a $250 million contract with the U.S. Army for what they call spectrum dominance. And that's right up CACI's alley. They maintain a database of 2,000 electronic emitters that is essentially, it's like a menu. The Army can say, hey, we want to jam these or spoof these, and CACI can do that for them. And this is going to flow nicely into their already $33 billion backlog, which is 3.7 years of revenue. $9 billion of that is already funded. So if there's any kind of temporary shutdowns or things like that, CACI should just keep on going. And we think it's what we call an enduring business and really set up for it to be a good stock the next 3 to 5 years.
And I'm looking at a forward PE of about 22. That would be pretty much the average right now that we're seeing for a lot of S&P companies, at least. It's up about 52% over the last year. Does anything concern you about what is very much a focus for the Trump administration now when he puts defense companies in his sights? Because he says he doesn't want to see them paying out high dividends. He doesn't want to see them doing share buybacks and big CEO pay, because he said most of them are behind in delivering what the U.S. military needs.
And CACI is actually very well aligned with the administration from that perspective. So from their capital allocation priorities, first of all, they self-fund their research and development, so they don't ask the taxpayers to fund that. And that's aligned with the administration. They also rarely do any buybacks. So they did a small one last year. Their stock was hit about 42%. It fell on the Doge fears. They took advantage of that. Otherwise, they don't do share buybacks. And they just use their money to grow the business and do mergers and acquisitions and enhance their capabilities for the U.S. Department of War. And they're doing a big acquisition right now that we really like, $2.6 billion for a company called Arca Group that's going to extend their capabilities from land, sea, and air into space, which is a whole new avenue for CACI.
Okay, well, CACI looks about 10% gain over the past 3 months. Kirk, it's good to see you. Thank you very much